Good evening to all of you. Welcome you to today's webinar. Today's webinar topic is intraday trading in commodities, and we have already had sessions on this, but it is better to practice so that you will be more confident to trade. And we are using the same thing like the simple indicators like moving average in different time frames. It's what we are using, and we are also looking at what the New York developments are, and also looking at the volatility in the market. So these are things which we have already discussed, and we are just reiterating the same thing again for your benefit. So we will first look at the international scenario right now, what's happening, and then we look at the Indian commodities also, and then look at what trading signals we can generate for the day. Right now, you know that the volatility is at its peak. Crude oil has been fluctuating heavily, and there was a very heavy fall a couple of days back, and then there was some small rally there, and then again it sagged yesterday. So there is a lot of whipsaws that are taking place, along with a big negative trend as far as crude is concerned. Gold last few days, very big fall, more than 5-6% fall in international price, and price has dropped to below $1,600 per ounce from somewhere around 1680 to 1690. It has dropped down to 1560, 1580, something like $100 drop in the last couple of days. Crude oil also has been extremely bearish, and so are the metal complexes. So right now let's look at what's happening internationally. Now the basic fundamental factor is everybody knows that the coronavirus has impacted world markets, and there is a lot of negativism about the economy, about the travel. US President recently clamped on the travel from Europe as well as on the goods to be imported from European Union. All these things have dampened sentiment. But governments are also trying to revive business by announcing various packages, also interest rate cuts. But all those things have failed to cheer the market because the fear is in excess of the stimulus that is being given. So the expectation is that probably there can be some bounces up and down movement can happen. So unless the market stabilizes to some extent, then it's very difficult to call the bottom. Today we saw in the Indian equity market, initially the trading was altered as soon as the market opened within 15 minutes because the major indices fell by more than 10% from yesterday's close. But after that, when the trading resumed at 10:15, immediately institutions bought, and there was a very big intraday recovery that took place in the market today. And so there was an initial fall of 10%, and all those losses were erased, and the market moved by 2 to 3% more than yesterday's close. So this is the volatility in the market right now. So today, if you look at the volatility in the Indian indexes, first a 900 point fall in Nifty, 1,500 points of rally, 2,400, then in between 300 to 400 points up and down movement. So almost more than 1 year movement was just encompassed in a single day. If that be the case, it's very difficult to trade the market. That's what I was telling yesterday also when we are looking at what needs to be done. It's very important that if you want to trade this market, you should trade with a clearly defined stop losses, and must be adaptable to change. You must be in a position to change. That is, we can't have a preset mind that the market is going to rise or fall, and we need to keep ourselves changing according to what the situation emerges. So that is a most important aspect, and that is why the trading has got a slight edge over other aspects. But one has to be a very good trader, and psychologically must fit himself into a trading mold, but with very clear defined knowledge also, because one is in trading, knowledge is important, resources is also important, psychological control is also very important. So all that what we are seeing is basically to help you with the resources in terms of knowledge and skill, and then probably inculcating the fear, removing the fear, and inculcating a sense of confidence through repeated practice sessions and webinars. So as part of that, today we are focusing on the intraday trading. Of course, we have had a lot of sessions on this earlier also, but now let's look at what's happening presently and see whether some trading signals can be generated. But one thing we have to keep in mind, today these days are very special days in the sense the volatility is very high. So please excuse me if I have to give a very big stop loss, because there is no compulsion that you should trade in a very highly volatile market for you to lose money. But at the same time, you should understand that what was a stop loss of 20-30 rupees in crude till a couple of days and weeks back, today has become 100 rupees or so. Similarly, in case of gold also, the stop losses don't come more than less than 2 to 3%. So that is the sort. So what needs to be done is that if you still want to trade, you should have a very clear strategy and go for a lower quantity, so that the loss is always very clearly minimized and quantified. So with that caution, let's look at what's happening right now, and let's first look at the international scenario right now. Now let's look at international gold. Right now, gold will put the first day basis, and if you look at it, I think on a daily basis, I think gold is slowly getting into a negative territory, we can say. I think gold seems to have exhausted this particular boom, and probably like Nifty, it can also have a fall, and it may go down up to 1510, 1513 levels. That's the first possibility for a gold. And right now we will have a lot of resistances if it tries to climb to 1620 or 1630. That is where the 20-day moving average is coming. So if you look at the weekly chart, let's look at the big charts of what's happening as far as gold is concerned. I think on the big side, I think still gold has a potential to rally after a fall. I think there is a reasonable support at this level, which is the 1550, 1555 levels, and that is where it came and took support yesterday also. So 1550, 51 is a very important support, failing which probably we could be heading towards a slightly much more bearish possibility of gold going down right up to 1445, 1447 or so, and from there probably the revival can still start. So right now gold is likely, so be careful about gold. Fall is possible if it's going to cut this 1555, 1560, and more than 100 points of fall is still possible as far as gold is concerned. So let's look at the smaller time frame to see what exactly is the trading signal in the international price, and so from there we will look at the Indian price. Now let's say this is the gold price right now. It is in an hourly moving average. It is just above the 20 but below the 50. So very clearly still there is no positivity as far as gold is concerned. So right now we need to look at the break below this particular low. This is the low where it came and took support, 1577. Right now it is going at 1585. So we need to wait for a break which is below 1577, and a break below 1577 probably could push gold lower. And so keeping this in mind, let's look at the Indian gold price. So for the intraday trading signal, we are looking at another maybe an 0.5% fall is necessary before we can go a little short. And right now itself it is falling. If you see this particular bar, it is now falling, and it is now at 1582, 1583. So not far off from where probably we have designated for a short position, because in an hourly chart, if you look at the moving average, it is below 50, 100, 200 moving averages which we have drawn. So clearly gold is bearish as far as the hourly chart is concerned. Now Now, in the case of it's just above the 20 moving average. So we should wait for this 20 moving average also to be pierced before we can go for a short position. So what we can do is just wait for, because the big trend as far as the hourly chart is concerned is on the downside, because it is trading below the 200 moving average. So once it is trading below the 200 moving average, we need to look at the shorter time frames, and if the shorter time frame moving averages are going to be broken, then we should be looking towards going short. So right now gold is a possibility of again slipping below this 1577, and let's look at a even smaller time frame of 15 minutes. And yes, I think in the 15 minutes also we probably could be heading a little lower, because this break, this 1577 means that again in the 15-minute chart also it will start going below all the major moving averages. Right now if you look at it, even 15 minutes, it is trading below the 200 moving average. Since it is trading below the 200 moving average, we should look at a downside possibility only, and downside possibility, if it is going to break below all the moving averages, then we should be looking towards going short. So let us see what happens before our session closes. Now it's at 1580 levels. So now even in the 5-minute chart, let's look at the 5-minute chart. In 5-minute chart, it is about to break the 200 moving average. If you look at it, morning time, it was slightly above the 200 moving average, there was a lot of support for it for some time, and now it looks as if it is going to break this, which means essentially we are going to look towards a bearish situation, and it is almost on the verge of breaking. So immediately we'll now shift ourselves to Indian gold prices, Indian gold futures. Gold futures. Let's look at the mini futures, if you get it. Gold mini futures. So this is the 5-minute chart as far as the mini futures is concerned. And in the same way that we are talking about it, as far as the Indian gold prices are concerned, it is definitely trading, even in the 5-minute scale, it is now trading below the 50 moving average. So very clearly, if it is now it has gone below all the major moving averages. So any fall which is again below this particular low, which is 41,673. Right now, it just came and took a little bit of support close to 41,673. So we will wait for a break which is above this 41,673 levels. So now, if you look at it, the Indian prices hesitated about this level. See that in the morning level, it was 42,073. I think again it went closer to the 44,000, 4050 levels and failed to break. So today any rally which came to 42,050 has been beaten back. So we should keep this as a stop loss and look towards selling, which is below 41,673. So 41,670 is a very important support. Right now it's going at 41,725 or so. So we will keep this mind 41,670 break and put stop loss at 42,050. So we will keep that now. So we will write this now. Gold mini. So 41,670 sell, and the stop loss for this is 42,070 or so, right? 40,075 or so we'll keep. So this is the stop losses which is coming close to 400 rupees, and any stop loss below that will get whipsawed. So the minimum that we can have right now is this, and the volatility is so high that let's look at where probably the profit target can come. Now let's look at the hourly chart here. The hourly chart is below all the moving averages. It's never even tried much today to go even above the 20 moving average there. So today the low has been this is the low today, which is 41,477. So that is one important area of support today. So if you go short below this low, keep 41,475, 480 as a possible profit target today. Otherwise, it may come down even up to this level, which is around the 41,313. So we can keep anything 41,475 to 41,320 levels as a profit target, as a possible profit target we can keep. It is trading below all the major moving average, even in smaller time frame. If you look at the smaller time frame, let us see, this is the 1 hour chart. In 1 hour chart, it is below all the moving averages. If you look at the 5-minute chart, also it is now going to go, it is below all the thing, and 15 minutes also it is now started to trade below that. So I think in all cases right now that we are looking at it is, we are looking almost to go short as far as the gold is concerned. So this is the intraday way of analysis in the market, and let's look at the daily time frame also. How does it look like? And yesterday was a very deep fall, and probably market is trying, probably it can go right up to this 50 moving average, which is coming close to 41,200 levels or 41,200 levels today. So there could be some support which could come in the market close to 41,200, but we have kept the profit target even at 41,300 to 450 levels. So that's a thing that we can keep. But if the gold prices is to go lower as per what we said as far as the international gold price is concerned, then at some stage the market can easily come down right up to this particular low at some stage to 39,290 levels at some stage. 39,290 levels and all is still possible as far as the gold prices are concerned even in the shorter term. So right now the expected levels could be this particular level where it is holding on. If you look at the 41,270, which where we are talking about as a possible area of profit target. So 41,270 seems to be holding for the time being, and any break below 41,270 can easily push it right now either to this low, which is 39,280, or probably this low, which is 39,750. So good possibility exists for a further fall in gold to the extent of 10% at least. So so gold is not a place right now for investment. Probably one has to wait for some more time before the investment opportunity comes as far as gold is concerned. So this is the gold scenario right now. So let's look at what's happening as far as the crude oil is concerned. So we will first look at the international crude price, and then we will come to the Indian price. So we will put the WTI crude oil futures and look at where it exists, what is happening there. Crude oil prices still is definitely under pressure, but there seems to be some small revival after yesterday's fall. So let's look at the intraday time frame charts. That is the hourly chart. In the hourly chart, at some stage there, the market crude oil went up to this particular level, right? So this is the level, right? So it has to cross this particular level before any meaningful rally can come. And if that crosses, then it will be able to, this 200 moving average is also coming closer to 3630 or so. So we need to see at least the 3630, 3640 levels being crossed in crude oil for it to rally. So till that time it is a short. So even today it can be shorted keeping this as a stop loss, but it's almost 10% more from this particular. That's why I said that in case of crude oil, the stop losses are very heavy. So we need to go to a smaller time frame if you still want to trade. And now we look at the 15-minute chart. So in 15-minute chart, if you look at the crude price, it is above all the, it is below the 20 moving average, but it is still above the 200 moving average as far as the hourly chart is concerned. So in the case of an hourly chart, it looks as if probably there is some sort of a bullishness still exists as far as the crude is concerned. And we need to see a break which is below this particular thing. That is where it is coming right now, because we have said that no, any important support resistance, if resistance is pierced, then that itself becomes a support. So right now that support is coming closer to the 32-34 at where this particular price exists. So any fall below this means I think probably crude could go down a little more lower, probably heading towards 3170 or even below that. So that is as far as the 15-minute chart is concerned. So we look at the 5-minute chart before we go to the Indian crude oil chart. Now here there seems to be support which can probably come up to 32, and then we have to take a call only if it starts falling much below this 32 level as far as the 5-minute chart is concerned. So there is some more time before we can go for a short in international crude prices. So we'll now look at the Indian crude price, where it is. Crude oil futures, Indian MCX crude oil futures. We are using investing.com site, which gives all these charts with respect to international charts as well as with the Indian charts. So it's a very useful site, so you can look at that. So Indian crude oil futures here, as far as the Indian crude oil futures is concerned, so this is the contract. And let's look at this chart, which is in the 5-minute chart. So we are likely to get support close to 2390. So 2390 is a possible area of support as far as the crude price is concerned, and the upward movement can get restricted today if it goes right up to 2450 or 2460. So this is a place where probably one can go short 2450-60 and keeping 25-20-30 as a stop loss. So as far as the present situation is concerned, I think crude probably in a 5-minute chart can hit right up to 2465, 2470 levels. So that is a place where probably one can look towards shorting crude for the day, and keeping today's high as a stop loss till now, which has come, which is 2510. So 2510 is where probably the stop loss should be kept, with 2460-70 as the area where probably you can go for a short. So let's look at the 15-minute chart before we firm up our mind. And in the 15 minutes chart also, if you're looking for a fall in the market right now, I think it has to fall below this low, which is 2339. That is where it is resting right now. It is resting closer to 2339, right? So 2403. Sorry, this low is 2403, and this high is also 2418. So any fall, further fall, which is below this, probably can get crude lower towards 2375 or 2378. So there are two possibilities that arise out of this, that we can look towards going short at around 2458 to 2460, keeping today's high as a stop loss of 2510. That is a much more better trade rather than looking towards a break of 2403. Only question is that if it doesn't go up and then starts falling below 2403, then I think probably you can still go short. Suppose there are two ways of looking at it right now. So the chart, what it says is that probably now crude oil, which is around 2420, it can hit right up to 2460. 2460, close to 2460, and this is the possible area where you can go short. And today's high, which is around 2510, is a place where you can keep the stop loss. That is one possibility. The second thing is that if it starts going low below 2410, then also crude oil can go lower. So either you wait for a rally to 2460, then go for a short, keeping 2510 as a stop loss, or you can short below 2410 itself if it starts to come lower. And but the stop loss there in that case, if 2410 is broken, the stop loss will be quite we have to keep some important high as a stop loss, which probably if it is going to break, then we need to keep 2460 as a stop loss, because we hope that that will not be penetrated in case if it starts to go lower. So if you want to keep if you want to short below 2403 or 04, then keep 2460 as a stop loss. This high as 2465 or 2470 as a stop loss for you. So the question is that if you're going to go short below say 2403, then the stop loss which comes is around 2470. This is 2460 I told you short, but here you can keep stop loss of 2470. So you get something like 65-67 rupees, which is almost 2.5-3%. And that is what I told you as far as crude is concerned. Even in a smaller time frame, the volatility is so high that we are not even getting say 1% stop loss. We are still farther off by 2-3% in case if it happens. Here also, if you put 2460, 2510, 50 rupees, almost 2%. So that's the volatility today in crude market. So you have to look at lower quantity in order to ensure that you don't make a loss. So that is very important, that you size up your quantity today. Okay, size up your quantity as far as crude is concerned. There are two possibilities as now the crude is going at 2420 or so. Observe for an uptrend which could be close to 2460 to 70, short it there, keep 2510 as a stop loss. Second point is if it starts breaking 2403, then also you can go for a short, because the reason is that clearly how you should practice in the charts, look at the moving averages. So this is a 15 minutes moving average. In a 15 minutes moving average, there is a support which comes to 2375, 76. But there is a support which is taken place at the 50 moving average at this place. So if it starts to fall below this, there's a good chance that it can fall much lower. So that is what we are keeping in mind, because if you go below 2403, first chance is that come up to 2375. 2375 can probably give a support for crude, and eventually we have to see whether it is able to bounce back. So the first profit target that can come is close to 2375 if you short below 2403. Profit target is less, stop loss seems to be a little wide. That is the perplexing thing, because why? The reason is that if it starts to come closer to this place, there is a chance that it can have some bounce back from that level. And that bounce back can even take it up to 2450, 2460 levels. So then at that time you should not be left surprised that what to do there. So we need to take the profits also quite fast in this market because of the chance of an FT bounce back. So please keep 2377 as a possible profit target right now. So this is let us look at the 1 hour. We have already looked at the 1 hour chart, I think, in crude in Indian market, I think. So I think we are still probably looking at possibility of a fall in case if it starts to go a little lower. So let's wait probably to see, because this particular area, it looks as if could be a very important, that is 2633, that is an hourly chart. So that is an hourly chart. That's why we are not trying to take the hourly chart, because in hourly chart right now the stop loss is still at 2633. So that's a very very heavy thing, and even if you're going to short at 2420, 2633 and all is a very meaningless place to put in a stop loss right now. So we are discarding the 1 hour chart frame. We are looking at the 15 minutes and 5 minutes, and in the 15 minutes we are willing to take today's high as a stop loss. Till now whatever high that has come is 24, 25, 10, 15 levels. So either we go for a short when the rally takes place towards one of those moving averages which was coming at 24, 50, 60 levels. So we can go short closer to that and keep this of 25, 10, 15 as a stop loss, and then put a profit target close to 23.77. And that's what we have seen in the 5 minute chart also, right? That's what we have seen in the 5 minute chart also. Now another thing that we have highlighted before is the New York time. See, normally the 6:30 to 7:30 time is what really dictates the trend there, and we have seen many times that if you look at the hourly chart, many times if the first hour in New York, which is could be 6:30 to 7:30 time, if that high or low is broken, that sets the trend for the day. Now let's look at even we'll put in Indian time, so we will just look at the Indian time. Okay, so let's look at probably this is on 11th. See, on 11th, this is the 6:30 to 7:30 time, and that I was not broken, and on 12th only that low was broken. That 6:30 to 7:30 low was broken, not on 11th, but on 12th it broke this particular thing. And after that, let's look at the time frames that we are going to see here. See, 4:30. This is 12th, right? So yesterday was 12th. Now let's look at this 5:30 to now let's look at 5:30, 6:30 to 7:30 show is here. So this is 6:30 to 7:30 yesterday. Now look at the 6:30 to 7:30 period. After that the market went above that particular high, 6:30 to 7:30 high, and so that can be kept, that low can be kept as a stop loss, and you can do the trade. So that's what happened yesterday. There was a little upward movement, mainly because the 6:30 to 7:30 high was broken. Now today the 6:30 this particular thing, I think we are having right now, this is the time frame right now. So this high low is very very critical. Suppose if it starts to break below this 24.03, so now it's there will be some more time left. So now let's look at the price. The price is 24.25. Price is 24.25. So if it's going to break this particular low today, 24.02, then eventually good chance that the market can be much lower. So the first hour in the New York time is very very important. So what you can do is that if it starts breaking this 24.03, then you can keep definitely this 24. This our high is 24.78. We have kept the stop loss of 24.67 and 70, so even that may not be penetrated. So this 24.03, if it is going to be broken, definitely you can look towards going short as far as crude is concerned, because that is the first hour of New York trading time, and any break below that will definitely give a very good positive signal for us to trade. And we have seen this is also the 6:30 to 7:30 time. This particular high low was there on 6th, and that was eventually broken, and we got a fall on that day itself to some extent, because the market closed at 12:30 there, and next day, because still it traded in the after our 12:30 New York was trading, and that's why we saw the gap the next day morning. So similarly we can see many times that probably see 5:30 this is again the 6:30 to 7:30, and once that low was broken, just see this particular low where I'm keeping the symbol. Once that low was broken, it did not once this low was broken, it did not go up that particular high. If you look at this particular high, that was not penetrated at all. this particular high. Let's say after that there was a climb which came very that is 35.58 or 35.60, and eventually it did not even, it went very closer to that, but it did not break any significantly on that particular time period of close. I'm talking about that particular close, not the high. So 35.58 high which was there, that particular high was not broken in any particular close period, which would have given us a probable sense of the market going up. So that did not happen, and so eventually the market fell that day. So we should try to keep some 10-20 points away from that particular high or low in order to put that as a stop loss, so that we don't get whipsawed. So that first 1 hour of New York time is also very important, and we have already highlighted that the on Wednesdays we have the crude oil inventory release, right? So yesterday also, day before yesterday, we had a crude oil release, and after that, whichever way the market moves, you should trade the market, and that is another important factor that we have to note, that unlike gold, because gold doesn't have any data releases, and it has only the general macro developments as far as the equity markets are concerned, what's happening with the world markets are concerned. So it has got nothing much to do with daily this OPEC meetings or crude oil production cut, inventory. There's no disturbance as far as news is concerned. So gold is a little more easier to trade from the chart basis, because very less impacted by inventory details and all. But crude oil is very much impacted by those things, so we need to trade ourselves very carefully during that particular period. So let's look at what's happening with respect to copper, and then before we come back to these charts again to make a review of it. So right now we'll look at the copper futures in India. So we have the MCX copper futures. Generally, copper is a very choppy commodity. Trading copper depends on how conservative you are, or how this one. Suppose if you're an aggressive trader, I don't think you will come to copper complex itself. So you will be more looking towards crude and then probably gold, and less towards copper. But if you're a little more conservative trader, then probably you want only smaller movements, then probably copper could be a better commodity for personality of for a conservative personality. So right now copper, if you look at a big time frame from where we take our subject, a bigger time frame, definitely if you see copper is definitely down, and today of course there was a recovery after it fell in a big manner. But right now I think copper is generally looking to be on the bearish side, and it has to really get above this particular 430 435 levels before some sort of meaningful uptrend can come as far as copper is concerned. So copper is generally still looking to be a little on the bearish side. So we will look at the smaller time frame chart. Let's look at the hourly chart, and in hourly chart it looks to be above all the major moving average. So for some time we have to respect this smaller time frame also, and let's look at we look at the trend line also. See here. So copper is right now right. So this is the probably this area of resistance is very critical. That is 427. 427.55 is a very important level, because if it starts still to go above that, because normally in the case of moving averages, what should happen is there should be let us say, see in this case of moving average also, in order to ensure that you don't have the whipsaw problem, allow one bar to be above all the moving average. So if it starts again to break above that one bar, then in that case it will confirm the bullishness in as far as the particular commodity is concerned. See here also, when it started to fall, let's see, it fell here, right? So it fell from here, it fell to all the moving averages, right? Now that confirmed that probably we have to wait for a fall further below this before you can really get into a bearish. So immediately we did not get into any bearish mode. But whereas here you see it has started, it has fallen up to this, and then successively again it broke below that. That is a confirmation that you can go short keeping this high as a stop loss. Similarly here also it fell below all the moving averages here, and then it started to continue to fall below that particular bar. that means you can now go short here, keeping this as a stop loss. Now, of course, in this particular hourly moving average, we need to get closer to 421 and then decide whether it is going to go up or down. But if it comes to 421, very close to 420, 421, reasonable chance of a bounce back up to 425 or so. So the important thing that we can understand right now is there is one bar right now which has come above all the moving averages. It has to break above this before we can establish our bullishness, or probably if it's going to cut below this low, then we are looking for a short, this particular bar's low. So that means below 424.50. So below 424.50, I think copper for the time being can go down. So right now it's at it's going at somewhere around 425.10. So if it starts to go below 424.50 today, go for a short and keep this 427.55 as a stop loss. So copper is copper can be shorted below 424.50. And stop loss should be 427.70, right? Possible target right now comes to 421.50. At 421.50, you need to evaluate if there is going to be further fall below that after one bar comes to take rest there, and successive bars again start penetrating below that, then go for a short, keep that particular high as a stop loss. So that is very, very important as far as the way of technical analysis is concerned, because the moving averages sometimes if it's a very choppy market, a sideways market, then all the moving averages can get clubbed, or this one. So you need to have confirmation before you trade on the moving average. The confirmation is that if one bar falls below all the moving averages, then in that case you wait for that bar to be cut again, okay, before you go for a short. Similarly on the upside also. So this is very important. Please keep that in mind. Okay. Now, same thing. So this is as far as copper is concerned. So we will now look back at what's happened with the gold, crude, and this one, and then take your questions. So right now we will go back to the gold futures to see what developments is taking place there right now, because we have given. Gold is 41,524. And very clearly we have asked for a short below this, right? So 41,672, 673 is where we said you can go for a short, right? So that has happened. As even before we could conclude, 41,673 has been broken, and it had come to 41,440. So that profit is there. So what did we say just now? Has come very fast. Let's say, see, we said sell below 41,670. First target is 41,475, then 41,320. Already this has happened. So even in our session right now, we have already made a profit in the last 5-10 minutes, right? So that is how the analysis helps. Not that necessarily that every time it is going to be profitable, right? But how do you analyze? How do you come to some decent conclusion whether you go for a short or long? This is how it is, right? So now we have completed this analysis as far as the gold is concerned. So we will look at what's happening with respect to crude right now. So in gold also right now, probably the fall can probably still continue once the fall takes place below this. So this is a very important thing. So if you still want to keep those who want to trade aggressively, can still go short below 41,475. Can still go short below 41,475. So let's look at the 15 minutes average, and it's all below that, and 5 minutes also it's below that. So I think it's a very comfortable case of a short, and further short can also be initiated keeping today's high as a stop loss. If you still prefer not to trade at this, but wait again for some rally to take place, just wait for some rally to take place, probably towards 41,800, 850 levels. just wait for a probable chance of market going up to 41,800, 850 levels, and then look towards going short there. So I think what we can do right now is that to just wait for to move up to this level, and then probably look towards going short at that level. So right now it's still the gold in all terms is right now not in a very healthy situation, and we need to wait for some more pickup in gold before you can go for a bullishness. Right now it looks as if the fall can take can continue for some more time. So this is on the 5-minute chart, and in the hourly chart it's definitely bearish, and in 15-minute chart also there is no big movement there also. So I think all said and done, I think see here also when it started to fall below this bar itself, see this is what I told you, that right now, see how do you classify the trend? If you are trading on the 15-minute chart, it is still below the 200 moving average. So you are looking for going short at any point of time if it starts to cross below all the moving averages, and this is the short place. And in this case, it just crossed below the 50 and 20. Wait for this bar, and once this bar is cut, you can go for a short. You can go for a short, which is 41,697, and you could have kept that 42,047 or 42,048 as a place where probably you could have put in your stop losses there. So right now it's a very clear case that now at this point of time you are already short in gold, and keep 42,070 or so as a stop loss. And if it just goes up a little bit towards the 41,860, 870 levels, then there is a chance that probably you can get to go for a short again. So again, the second time if you want to go short right now after taking the profits, you will be to go short close to 41,820, 830 levels. Keep 42,070 as a stop loss. Now in this particular case, what will happen? If your stop loss is triggered also, already in the first trade you have taken profit. So the second trade, even if it gives a loss, you will not make an overall loss for the day. But again, if it starts to come down from that level, good chance that you will make your money there. So this is how you make this one. So the trade, and now let's wind it up with again looking at the crude oil futures here. Sorry, I think. Crude oil futures. Some small revival in crude. So let's look at this particular revival as we spoke. It's still only 24.40. It has not come to 24.60, and it has not broken this low of 24.03. So we will wait. You have to wait for that, and let's look at the thing. I think yes, you have to wait for this 24.03 to be broken, or you have to wait for the market to pull itself right up to 24.40, 50 levels, and then go for a short. So right now, crude still is hanging around without giving a straight signal for us. Either it has to break below this 24.03, or it has to get closer to 24.50, 60 levels where you can go short, keeping that 25.10 as a stop loss. So this is the trading signals for the day, and this is how both using the New York opening hour as well as the technical charts using the moving averages in a smaller time frame we have illustrated in case of gold, crude and copper. We will continue all these practice sessions again and again so that you will get confidence. So time is close to 7:45, so you can please ask your questions now. Crude trend tells us. So I have told you the crude trend. Crude is definitely on the downside, but it has to. If you want to go short, you should go short at around 24.55 or 60. Now, when you talk about trend, we have to take about which time frame you are going to talk. So let us look at the hourly time frame chart. In the hourly time frame, crude, it is below all the major moving averages, right? So you can say definitely it is in a the trend is down. Now the classic definition of the trend is that lower low and lower tops. So what will happen is, if the market, if crude is going to again break this 2403 levels, then we will have a lower trend, because this is the last hour low, right? And it has been a heavy fall if you're getting from 2478 to 2403. So if this particular low is going to be broken, then we can say that in hourly time frame, what was developing as a mild uptrend in the last 1 day or so, I think that will get broken. Last 1 day from yesterday, there was a mild uptrend of higher tops, higher bottoms in the hourly chart. Now that will get broken with this low being broken at 2403. So the trend will be on the downside if 2403 is broken. So that is the crude trend. Then if you're looking at other time frames, because the smaller time frame will always confuse you, and here also if you see it just took support here, and if it's going to break this particular low, of course there is a moving average coming at 2378. If it's going to break this particular low, then we can say that probably again we are going to have a lower tops and lower bottoms. So crude trend, even in 15 minutes chart, it has in hourly chart, it will get confirmed if 2403 is broken. But we are trying to be a little more instead of waiting for that trend to develop, what we are looking at is probably we are guessing that 2510 can be a top for the day. And so we are trying to see whether 2460-70 levels is where it's short. It's a little risky case, because you are not getting the trend completely with you unless this 2403 is broken. But it is a guess that probably that at 2450-60 it will struggle because of this particular moving average and fall from there. So that is why we are giving a call probably to look towards short at 2450-60 levels today. So thanks very much for participating in today's webinar. So happy weekend, and hope to see you again next week. Thank you very much.